Dogecoin is coming to crypto platform Coinbase in 2 months, says the CEO. So Dogecoin is coming to Coinbase Global, the company said on Thursday during a call with investors and analysts to discuss its first quarter performance. The plan is to list Dogecoin in the next 6 to 8 weeks, said CEO Brian Armstrong. The Coinbase boss said that there is a need to accelerate the process of how the platform adds new digital assets to its suite of offerings. So Dogecoin is a meme stock with a stratospheric rise in value so far this year and has been added by a number of rival platforms in recent weeks. Now, Coinbase's main offerings include Bitcoin and Ethereum's Ether coins, but it has steadily grown its plate of crypto assets. Now, the report on its plans to offer Dogecoin come as the crypto platform reported first quarter earnings of $3.05 per share, or $771 million on revenue of $1.8 billion. Now, the results were mostly in line with investor expectations and matched the company's preliminary reports. Now, I think this is actually a pretty interesting thing because a lot of people have different views on Dogecoin. And I think it's a very big chance or a very likely chance that Dogecoin will eventually hit the price of $1. Could that be this year or could that be next year? I don't know. But Dogecoin is pretty much always going to be a currency that will continuously rise and then crash, then rise, then crash a little bit higher, then rise again, and then crash a little bit higher, right? Because if you were to look at the way Dogecoin's historical data kind of shows, right? It tends to go on to these like massive pumps, then crash really hard. But the crash really hard thing never goes down past a certain point, right? And then it ends up going back to a whole big pump thing again due to like someone like Elon Musk, and then crashes again and crashes hard, but it doesn't typically go past the point of basically where that pump really started to take off, right? Like it's typically almost like halfway up the pump is typically where it crashes back down to later on, and then it just continues again and then crashes down again. So it's a very interesting historical data for Dogecoin. Do I think it's a great investment? Not really. But if you are someone that has like extra cash and you've already managed your money to the point where you're not living paycheck to paycheck, you've basically mastered your money completely. And if you haven't mastered your money, you can check out the Master Your Money link down below and learn how to actually master your money. But if you are in a financial position where you could put like a couple $100 or a couple $1,000 into Dogecoin and you're willing to hold it for like the next 5 to 10 years, like you're perfectly okay with that. And you're basically like thinking like, okay, as soon as I put this money in, I'm basically not caring what happens to the coin for the next few years. Then I could see potentially making a good return on that. That's probably what I would do if I were to put money into Dogecoin. And again, Dogecoin is not really an investment. It's just a currency. The way I see it, Dogecoin is no different than the US dollar, no different than Ethereum, no different than the euro, no different than the Canadian dollar, no different than the yuan. Right? It's just a currency, right? And people can use it to buy stuff or not. So take that as you will. Like, again, people have very different views on Dogecoin. But when it comes down to it, just view all these different cryptocurrencies like a currency, not as an investment, right? If you view it as basically you're exchanging your cash for a different form of cash, then you start to view things a little bit differently, right? Now, Bitcoin could be kind of considered a investment because you can't really use it as cash for the most part. But compared to every other asset class, well, every other crypto coin, I should say, just view it as a separate currency that you may have a lot of buying power with or may not have a lot of buying power with. And if you end up exchanging it back for the US dollar or whatever your local currency is that you interact with a day-to-day basis in the future, it might be worth more, right? You might get more money on that exchange, right? And that's the way you got to also look at it too, right? It's very like the way that people end up, getting into cryptocurrency and then getting out is pretty much exactly the same way as Forex day trading, right? Or just Forex, right? Where you're exchanging foreign currency, right? You're exchanging the US dollar to the euro because that exchange rate will basically end up creating like a certain amount of profit, right? And if you were to exchange the euro for the dollar, you end up getting more dollars per euro. So that's just the way to really look at things, right? Don't look at cryptocurrencies necessarily as investments. Look at them more so as an actual currency. And then once you start viewing things like that, then you start having a very different way of viewing it. And never get into something in like a short-term type of mindset, because if you always end up getting into something in like a short-term mindset, you're going to basically get to the point where you're going to start stressing about something. You're going to react emotionally. You're going to try to short sell something to try to make a lot of money, or you're going to try to day trade something and you're going to most likely lose money if you were to do something like that. Whereas if you were to put money into things that you're willing to hold for a long time and you don't necessarily care what happens in between, then you have like a certain time frame goal. It's like, okay, I believe in the next 5 years, or I believe in the next 10 years, this company or this currency is going to probably do something, right? And this is what I think it might be capable of doing within these next 5 or 10 years. It's like the same thing as people who end up investing into real estate, is that they don't invest into real estate to just typically flip it, because most flippers end up losing a lot of money. They typically invest into real estate where, okay, they look at a certain location. The location may not be doing so well right now and may not do so well within this next year or the next 2 years, but within the next 5 to 10 years, there's going to be a lot more development in this area, and all the home prices will eventually rise a certain percentage, and I'll be perfectly happy putting some money in here because I'm not planning on taking money out or selling that property for the next 5 to 10 years. I might not ever sell that property at all, right? So that's the way to really look at things when it comes to putting your money into something other than like a savings account. You got to look in the long-term perspective, right? Never really think about anything in the short term. Look at the thing for long term. Okay, where do I see something going in the next 5 to 10 years? And once you start doing that, and of course, after you've managed your money to the point where you're no longer living paycheck to paycheck and you're not in a massive amounts of debt, and you have the freedom and the opportunity to put money into things that might potentially make you more money, then that's what would be a viable option for some people.